Now what helps, if you look at this, remember we are asked to complete a debtors collection schedule. I always just make myself a little note like this where I say 50% after 30 days, 30% after 60, 15% after 90 days, and then 5% written off. So you don't have to go and flip through the solution the whole time and get totally confused. Now you've got it all on one sheet, and this is now how you're going to go and determine your debtors collection schedule. All right, now they've given us the sales figures for July, for August, for September, we've got for October, November, and for December. All right, now you're going to, the solution will appear on your screen as well. So we'll take them one by one and go through how do we do the calculation. Now the first thing that we had to go and do is we had to take the total sales and take 75% of each of those amounts to determine our credit sales. So if we go and have a look at what was the total sales of July.
The July sale was 12,000 Rand.
And 75% of that gives you 9,000. Okay, so we can quickly calculate them. 16,000, if you determine 75% of that, that gives you 12,000. 12,000 again, so that's 9,000. Okay, for October, what was your sales?
Let's go to our projected. Remember, you had actual and projected, right? So you're working with two types of figures here.
Okay, in October it was 8,000, so therefore 75% of that is 6,000. Really, by now you should be able to calculate 75% of an amount. We've got 12,000 again, so that gives us, we had it previously, just once more, that gives you 9,000. So you'll remember that these amounts represents 75% of the total sales. And then the last one, 20,000, 75%, that's 15,000. So now I'm in a position to go and calculate how will I collect these amounts from my debtors.
Right, so starting with the first one, if we look at July, right, it was 9,000 times 50%, and when will they pay you? They'll pay you in August. That's the 50% that will pay you, but August is not in my budget period. My budget period is October, November, December. So the 30% that is supposed to be paid for me, that also doesn't affect my budget period. But the last one, can you see the 15% of your July sale has an impact on what you're going to collect in October, and that's where you get the 1350 from. So what was it? 9,000 times the 15%. So watch, there's a particular method that we are applying, and it's important that you apply this method into your debtors collection schedule.
Okay, if we take August, if we look at August, remember what I sold in August will be collected in September, will be collected in October, 30% will be collected in November, and then the rest will be written off. So if we look at the solution, we said in October I will collect 30% of the amount, which is 3,600. In November I'll collect 15% of the amount, which is 1,800.
Moving on now to September. Now remember, in September they're going to pay me in October, and that is my budget period. But now watch what happens here. The 5%, it's important. You can't go and take 45% of 9,000. That is wrong. If you do that, it's wrong. What do? You first calculate 9,000 times the 50%, which gives you an amount of 4,500, and then you subtract the 5%. Please, I'm appealing to you, do not make this mistake in the exams. Ensure that you first work out the amount and then work out the 5% that is due.
Okay, then for November we will collect 30% of the amount, and in December we will collect 15% of the amount. So 30% of 9,000 gives me 2,700. In 15% of 9,000, 1,350. So you can basically see the trend now. What I sold in October will be collected in November. Very important what Ashraf just said. You can't just automatically go and say 6,000 minus 55%. No, you have to say 6,000, 50% of that, first of all, get an answer, and then go and subtract 5%. That gives me 2,850. Then in December, I will collect 30% of the amount. And Ashraf, let's just take them to that slide to see what is 30% of the amount.
1,800.
Okay. Then we go and have a look at November. What I sold in November will be collected in December. First, you take the 50% and then you minus the 5%. and that came up to 4275. Okay, so now we've completed. If we look December, won't that be part of my budget period? Because what I sold in December will only be collected in January. Ask yourself, is January part of the budget period? No. So therefore, nothing of what I sold in December will be collected in our budget period from October to December. So what are we supposed to do now?
Now you look at the budget in totality and you add up. What's the amount for October? 9,225. What's the amount for November? 7,350. What's the amount for December? 7,425. Now what have you done? You've planned. You used a management tool, a debtors collection schedule. So you know exactly in October what amount do I anticipate to receive from my debtors. There you've got your figure. What amount do I anticipate to receive in November? There you have your figure. What amount do I anticipate to receive in December? 7,425. So you already have some idea of the amount of money, of the amount of cash that you will be receiving from your debtors.
And you must remember you've been asked to do a cash budget. So your most important sources of income on the budget would be your cash sales and the cash from debtors. So under your cash receipts, you'll have your cash sales, which represents 25% of the total sales, and then you have got your cash from your debtors, which you got from after you've completed your debtors collection schedule. Now let's have a look at the projected income statement. The main aim of any business is obviously to make a profit. Regular and thorough planning is essential. Budgeting is an integral part of the process. It's a forecast for the future, and the current budget is used to plan for the future. So once you've drawn up a budget, you can ask yourself, or you'll be in a position to say, will I have money in future for expanding my business, for developing certain things? That's why you do that particular budget.
So obviously, the enterprise has to prepare a projected income statement for the future based on the current income statement. Obviously, you know what has transpired in your last financial year, right? So what does this mean? Does this mean that managers just sit there as fat cats and do nothing? No. A manager has this responsibility to ensure that the planning takes place for the next financial year. So therefore, the projected income statement is based on the previous year's figures.